Welcome back to the channel, everyone. If you're to someone who is serious about understanding the risks and opportunities of investing in today's global economy, this video is for you. In recent weeks, the relationship between the US and China has become one of the most crucial factors affecting global markets, and it is something every investor needs to pay attention to. Whether you're a seasoned pro or just getting started, the trade war between these two economic giants has heated up to new levels. With tariffs as high as 145% on Chinese goods and a 125% tariff on US products, things are getting tense. But here's the big question. How are American companies, specifically the giants like Starbucks, Intel, and Tesla, handling this? And more importantly, how will these rising tensions affect your investments? In this video, we are going to break down exactly why these companies' massive exposure to China could be a ticking time bomb for their future growth, and we'll explore what that means for your portfolio. So, make sure to stick around. Let's start with Starbucks. You probably love your morning coffee, and you may not realize that Starbucks has deeply embedded itself into the Chinese market. In fact, 19% of all Starbucks locations are now in China, and this number has been growing rapidly. Starbucks didn't just open a few stores there. They made China a crucial part of their global expansion. But here's the problem. As the political landscape gets more strained, Starbucks' success in China could become a double-edged sword. What happens if consumer sentiment in China shifts? Or if nationalism rises and people start avoiding American brands? Tariffs on goods and rising production costs could further erode their margins. For Starbucks, China isn't just a market, it's a lifeline. And if that lifeline gets cut, the company could struggle. Next up, Intel. Did you know that a whopping 29% of Intel's revenue comes from China? That's right. Almost a third of Intel's total revenue is tied directly to Chinese demand for semiconductors. The Chinese market is one of the world's largest consumers of chips, especially for things like data centers, personal electronics, and AI technologies. But as trade tensions rise, so do the risks. Intel, already facing stiff competition from companies like AMD and Nvidia, could find itself in a tough spot if Chinese regulations become more restrictive. The chip industry is already vulnerable to geopolitical risks, and a disruption in Intel's Chinese operations could be devastating. Finally, let's talk about Tesla. Tesla may be an American company, but its future is increasingly dependent on China. About 21% of Tesla's global revenue comes from the Chinese market, and more than half of its electric vehicles are made in China's Shanghai Gigafactory. That factory gives Tesla huge cost advantages and direct access to one of the largest EV markets in the world. But if the trade war continues to escalate, Tesla could be facing huge challenges. Regulatory slowdowns, consumer pushback, and rising production costs could hurt their margins. And let us not forget about the growing competition from local Chinese EV manufacturers like BYD and NIO. Tesla's position in China could slip quickly if these factors come into play. So, what does all of this mean for you, the investor? If you're holding stocks in Starbucks, Intel, or Tesla, you might be wondering, how much risk am I really taking on? And the answer is, a lot. The U.S. China trade war is not just some political drama happening in the background. It's directly impacting companies that are heavily exposed to China. These companies are not just selling products there. They've built entire business models around the Chinese market. And with tariffs, political tensions, and rising nationalism, things could go south quickly for them. But here's the good news. Knowledge is power. The more informed you are about these risks, the better equipped you'll be to make strategic decisions in your portfolio. Don't panic, but do stay proactive. If you're invested in companies like these, now is the time to review your positions and assess the potential impact of continued trade tensions. And if this video has sparked your interest in investing, I've got just the platform for you, Freedom24. It simplifies the investment process and gives you access to a wide range of opportunities, no matter your experience level. Plus, if you sign up using the link in the description, you can receive a coupon for one share worth up to $700. For anyone looking to diversify their income streams even further, I've also got a free ebook on how to generate income online, whether it's through freelancing, affiliate marketing, or dropshipping. Check out the link in the description for that too. So, stay informed, make informed decisions, and don't let the political noise throw you off your investment strategy. Thanks for watching, and I'll see you in the next video.